to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 122 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, AJ Brown. AJ, episode 122. I'm looking at the screen, all-time highs. I mean, that's pretty optimistic, are we not?
Yeah, it makes no sense, but it is. And so you trade what you see, right?
And when you say it makes no sense, is that because we don't have enough negative news to kind of get us a little bit of the pullback that we've been looking at?
You know, the optimism index, even on Tuesday, we had consumer confidence being reported, and it came in, it's starting to, get knocked down a notch. And yet the investor optimism is there. And so I can't explain it, but again, you trade what you see, right? You trade what you see.
And in what we cover here on the show, this time lapsing of us not knowing whether there's a big move or a big move up or big move back, that's been benefiting some of the positions and some of the things that you've been teaching. Is that correct?
Oh, absolutely. Absolutely. Most of our strategies are self-adjusting. And so, or semi self-adjusting. We might have to do a trade here or there to adjust the position. And so, if anything, people's positions are either getting hedged with protective calls, or they're getting to where they're getting exercised at max profit. So, I mean, it's all working out for everyone.
And is there any of the economic news that you've seen this week that's sticking out to you, that's giving you some red flags? I know that we do look at the sentiment of rate hikes or not, and it seems as if more and more people are suggesting that we're not going to have any hikes at all through the rest of the year.
I mean, the early part of this week, we had a high close on Friday last week. And then all this week, we kind of stalled because different Fed representatives, Fed presidents were saying, hey, we still don't know if we have inflation under control. We want to see some of these, in other words, they were pushing back on the idea that there would be rate drops this year. In fact, investors went from thinking that this year we would see a whole point drop in interest rates to only seeing 3/4 of a point rate, drop. And as you can see, Monday and Tuesday and Wednesday, with all of that information. And on Wednesday, we had the preliminary GDP numbers reported. And, with the GDP numbers, this is for Q4 of 2023. They give us an advanced number, and then a month later, they give us the preliminary number, which is a revision of the advanced number. And then finally, a month after that, they give us the final numbers before they move on to the next quarter. And so we got our preliminary numbers, and those numbers, the GDP numbers, were not much change. They were slightly lower, like 0.1% lower. But with GDP numbers, they also give us kind of a preview of what the personal consumption expenditures number was. And on Wednesday, the preview was a little bit higher than we had expected. And so investors started to feel a little bit negative about that. But then on Thursday, we got the official personal consumption expenditures number, the income and outlays numbers. And let's just take a look at those really quick.
And just real quick, for anybody that maybe has never heard of what is it, the PCI? Is that what the acronym is?
PCE.
What's the importance behind the PCE?
This was a economic indicator made really popular by Alan Greenspan, one of the longest running Fed presidents. And it's been the Fed's go-to measurement on inflation. So I know we put a lot of emphasis on the producer's price index, and even more importantly, the consumer's price index as a measure of inflation. But this particular measure of inflation is the one that the Fed seems to look at most. And so, as you can see here, if I take a look at these numbers, the first thing you take a look at are these numbers around income and expense, right? So, income is up 1%. This is month over month. That's not bad, for us to finally see that our incomes are coming in and they are higher than what the prices have been going up for us at the grocery stores and the department stores. That's not a bad thing necessarily, although it was a little bit hotter than expectations. But then you've got your personal consumption expenditures. This is what our expenses are. And that was right in line, right? 0.2%. And then you start to factor out some of those volatile goods, right? The Fed doesn't like to make big brushstroke decisions based on things like, eggs or gasoline, because these have so many variables that they go up and down in price, and it's very hard to make long-term decisions on those. So they start to pull those out. You can see the PCE price index right in line with expectations. You can see the core. This is where they factor out a lot of the volatile things that we have in our economy. And that's right in line with expectations, a little bit on the hotter side. But when you look at what's been happening year over year, I mean, this number is coming down. And so because that number for the personal income and outlays economic report yesterday came in, where people expected it to come in, you can see that investors kind of took the brakes off yesterday. They said, "Oh, we were thinking that we should start to worry about, not only, in the beginning of the week, they were talking about, what if the Fed raises rates again?" But, yesterday that pressure was removed, and you can see today it's sinking in on investors. They're having an up day so far today. So, that optimism is hard to swell. But gosh, Sip, I redrew my chart because we had that little pullback for a couple days. We've actually been having a lot of pullbacks, but that one pullback triggered my indicator for a couple days there. So I redrew now that we've got another line of support and resistance, and this pullback again was less than what we would have wanted it to be to really power traditionally what is a uptrend, right? When we have an uptrend that really can stand the test of time, like months, if not years, when we have these what I call range contraction moves, they tend to be a little bit more. In fact, they tend to go around the halfway mark of the prior expansion move. And this one just was a little, fart in the pan. And so the scoop is um, it's creating again this pivot point. I readjusted it because it seems to keep going and based on this new data. And that's how we have to be as traders. We have to take each new piece of data, factor it into our overall picture, and readjust. So I still am out there saying that this is unsustainable. And although we're all trading uptrend right now, we have to be hedged. We have to be protected. And you're seeing it. I mean, do you mind if I pull up the VIX at this time?
Yeah, and why would we want to know what's happening in the VIX? How's that going to validate anything of whether the market's going up or not?
Sure. The VIX is a broad measurement of how much people are hedging or insuring their positions, their long positions. And so, as the VIX overall, yes, we can see that in the short duration, like in the last 5 days, the VIX has pulled back. And you can see that there's this line of support growing. But you'll notice overall, over the last 2, almost 3 months, the VIX is heading higher. And the higher that the VIX is, gosh, that usually means that people are starting to add more of these insurance policies, more of these hedge trades to their portfolio. So people are hedging, if not hedged, against a potential pullback. And I've been telling all my program participants to do the same thing. Have your protection in place.
And that's just because we don't know how high it, like, when the top is going to be found. I do have a follow up to this notion that I keep hearing about a soft landing. And so, does the information this week and then some of the movement acted, doesn't that kind of indicate that we are continuing to land softly week
Yeah,
over week?
it really is. Except, it really is. And here's where, the Fed's reputation plays in, because the Fed doesn't have a good reputation for soft landings. The last soft landing it did was in the early 1990s. Every landing that it has done since has been hard, to the point where the tires have fallen off the plane and we've gone into recession. So it's just doubting Thomas here, saying it is it possible? Could this be possible? Because their track record is in the toilet for this. So, yes, it's doing like they expected it to do. It's doing like they've been saying this to do. This might be just a lack of trust based on experience with the Fed, that they've said it before and they typically have lied.
Well, I mean, I think most long-term portfolio holders are pretty happy right now
Mhm.
with the highs. And if you're not using the power of options as a tool to hedge to protect yourself in the future, this is a great time for that. This is a great time to get involved. This is a great time to learn a little bit more, and that's why AJ and the team at Trading Trainer have created such a wonderful program. Um, Before we move on with the show, I do think it's worth visiting Bitcoin, and that's
Mhm.
because it just crossed 64,000, and
Mhm.
we've discussed how it's kind of one of these alternative assets, and
Mhm.
it's kind of just chugging along with the market. Have you seen anything in your analysis of effects of Bitcoin or not, or is it just kind of follow the overall market nowadays?
So no, it's definitely, if we take a look. So let's bring up some of the more traditional, like gold, for instance. So gold's at about $2,080. This is what we typically called a hedge or a defensive play. I'm pulling up the gold chart right now, just off of the CNBC site. Let's see if we can get it to come up. It's taking a little minute here. There we go. This is a year-long chart, and so you can see that pretty much since about December, end of November, that gold has been stable between about 2,000 and $2,080. It's been kind of vacillating there, but we call this kind of a sideways choppy outlook on gold. So people are not loading up on gold in order to hedge themselves. Now, Bitcoin, on the other hand, um, people are still unsure of what Bitcoin is, and some people do use it as a hedge. But the scoop is that, and I'll pull it up here as soon as it comes. It's been skyrocketing, and I think that look, here's the headline. Bitcoin tops 62,000 to close out its best month since 2020. I mean, it had gotten a big knock on the chin with the Fed's interest rate hikes and the Fed's quantitative tightening tactics in full effect. But take a look, behind the scenes, it's been going up. And I think that this latest push has a lot to do with what's called the Bitcoin halving that's coming around the corner, right? This is where they're going every time all these miners find a Bitcoin. They're going to find half as much Bitcoin as they have been, right? Every couple of years, it's actually by the number of Bitcoins mined, and this is by design, that it gets harder and harder to mine them until they've all been mined. And so there's going to be less Bitcoins available to mine moving forward. And that, of course, scarcity increases the price of stuff.
Yeah, unlike the US dollar where we just keep making more of it if we need it, right?
I mean,
Uh,
yeah,
do do
yeah,
you want before we I do you wanna run through the balance sheet, the Fed balance sheet? 'Cause
sure,
I always like looking at that week to week on,
yeah.
what the Fed's doing, right?
So you and I have been talking about how the Fed kind of took the beginning part of February off from tightening. Tightening means that they are selling off their assets. So the Fed has this third lever, right? Number one lever is their rhetoric. The stuff that they say publicly, whether it be at a official scheduled press conference or whether it be, individual Fed presidents doing interviews, whatever they say is scrutinized and then investors react to it. And that is a number one primary tool or lever that they have to basically influence the economy. The second one, of course, is interest rates, which gets all of the focus because it affects most of us in our everyday lives directly. But the third lever that they just, as far as the Fed history is concerned, they really started using right after the 2008 financial crisis is this thing where they buy bonds, whether they be mortgage backed securities or government bonds or corporate bonds. They buy bonds as if they're a bond trader. Except the difference is you and I have to, earn money or our money is, you know, somehow we have acquired our money to buy these bonds to be an investor, whereas the Fed, when they want to buy something, they basically print the money, right? They create an IOU. And so the Fed just marks it as, hey, I created this money today to buy bonds. And so this is their balance sheet. This shows how much, they've printed. And so what they've been doing is selling these bonds out in the market and then taking the money and applying it towards their balance, right? And so they're trying to get their balance sheet down. At the height of this buying, which was right after the pandemic, they had close to, let's see if I can, it's more than a year. Here we go. And then let me zoom in here a little bit for everybody to see. At the height of the pandemic, their balance sheet was up to about $9 trillion of just IOUs. And they've whittled it down to about 7.5 trillion. They've made it public that they would like to whittle it down to 5 trillion, and then possibly even further, but they at least are on the fast track to get it down to 5 trillion over the next years. And they've been doing that. This little burp here was when a couple of the small financial banks failed. So they did some buying to kind of make sure that they shore up the economy. But as soon as they figured that out and put some more long-term things in place, they started selling again. And when we started to look closer, like during this month of February, we saw that they had stalled and we were wondering what was up. But then, they stalled, and then last week they sold a whole bunch. So, they're on their path. And what this does when they sell these assets in the public is it also is a form of tightening. It doesn't directly affect us as mainstream people, but it affects the bond market, which indirectly affects us. So this is another way that they are slowing down the economy is by selling off. It's called quantitative tightening. And they don't usually put the besides that big announcement that was actually, gosh, over a year ago, that they wanted to get this number down to 5 trillion. They haven't really been putting a camera on this, but you and I on our show look at this often because we know that this is also a drag on the economy. So in addition to those high interest rates and this quantitative tightening, it's one of the reasons why I'm so perplexed that the frickin' optimistic investor won't give it a break, right? And so I almost feel like at some point this investor sentiment is going to reverse, and the soft landing is a true thing, like you said. But man, it feels like something's going to break. You know how the hairs on the back of your neck stand up? The hairs on the back of my neck are standing up, although the barber just trimmed them, so they're only standing up a little bit, but they're standing up.
Now I have a prediction of what that could be, and don't hold me to it,
Okay.
and don't consider me a bad guy here, but we do have two very elderly men running for president of this country, and if we just look at data, and one of them goes down, that could put the country in kind of a, hey, what's going on here?
Mhm.
And looking at history, it has happened in the past, but which is something I think we could touch on after we take a little break here, because we do have a little political piece. So we're gonna take a break. I don't ever want to wish harm onto somebody. I'm just looking at the numbers here. And if I had to guess if something could go wrong, there's a likelihood there. We're going to take a break. But before we do that, I do want to give everyone a chance to hop in our daily workshop. If trading trainer or getting to know AJ strategies is something that you're interested in learning more about, he's got a wonderful daily workshop where he breaks it down, gives you the play-by-play on how you can get involved. If you've got a portfolio that's looking good right now, man, some of these strategies will really be helpful for you throughout the year to kind of protect yourself. So I'm going to go ahead and throw the link in the chat. We do have it down there in the scroll bar. We're going to take a break here. We'll be back. In the meantime, if you do have any questions, feel free to throw them in the chat, and we'll try and get through them if we can. Otherwise, sit tight. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, back at it again. I saw this note here. I'm going to go ahead and pull it up. And maybe you have a little bit more insight on. Let me change that. This is going to be daily topic, right? The daily topic is political partisanship swaying economic view, in the sense that they can't get along and it's going to affect us all, right?
Well, there was this article done by CBS News. And this was an article done back in August, but it's been getting more views this past week. And it has a lot to do with how people think about the economy, right? And so, you and I always think about, well, economic news, right? That should give us an insight on the economy. Maybe what the Fed says or what the Fed does should give us an insight on the economy. Also, on this show, we've talked about what we personally have as our financial situation. Like when we go to the gas pump, when we go to the grocery store, that gives us kind of a perception about what the economy is. But the one that a lot of us like that are in the markets and that are looking at the broad market don't really think about is just the political, view, right? Political partisanship. And that seems to play a huge role, like bigger than I thought of, until I started to hear about it again this week. And I found out that original article. I've got that original article up on the screen here. What it basically says is, depending on who you like for president, that's what you're going to think the economy is doing. Sorry, I scrolled down to all these ads. They're streaming. The CBS is, I guess, their website is one of those ones. But for instance, if you are on the red side of the aisle, you probably believe that the economy is bad, no matter what the economic news is telling you. Well, no matter what the Fed is telling you, no matter what your personal situation is or what you're seeing, in your personal finances or at, your view of the grocery store, you still have this bias that the economy sucks. And if you're on the blue side of the aisle because there's a blue president in office, well, gosh, you might, it might not matter what the Fed says or what the big economic reports that give you like solid statistics are saying. It may not matter what your personal situation is. You think things are good, right? And so I didn't realize, being a data guy and being a pattern observer, that I need to also factor this into kind of when you're thinking about, are people thinking the economy is good? Because when you then go to make investing decisions, right? This is something that people factor into their investing decisions, whether they think the economy is good or not. So you can't just draw your conclusions about what people think the economy is doing based on, economic news, what the Fed says, or even the price of eggs and gas or milk. You also have to take into consideration the huge divide in political partnership. And that was a big aha for me. Do you have any thoughts on that, man?
Well, I think it validates that the market is made up of a lot of opinions, a lot of thoughts, right?
That's
And
what it is.
you and I and people that have portfolios can choose to decide what is going to sway us. I'm curious with that statistic if it's like a state thing, because I do think that America, the country, is a little bit more divided state by state than we kind of like to give credit, in the sense that, like, some of these smaller states, I mean, they're like a tiny percentage of GDP of some of the bigger ones. And it's like, do you really have an equal say? Or do we look at the overall data, and then I look at that, and then I look at how old our presidential candidates are, and then I look at whether Donald Trump can even run for office, right? Because that's still up in the air. But from your perspective, in that the politics does have a impact, I think, yeah, we've seen that in the past with just like presidential election years when that happens. And I remember when Trump was first elected, there was a lot of market jitters like that week.
Yeah. Yeah. And, it's just a very interesting phenomena because a lot of the folks, remember, as investors, as traders, as most of us traders that are watching this show, we're not what I call market movers, meaning we can't actually do so much trading in one way or another that we can affect the price of many of our securities. Now, if we're in the options world, maybe we can get into some options where, we become most of the holding of that particular option and can sway it. But I'm talking about stocks and ETFs and indexes. There's no way our buying and selling could move those prices. Like, say, for instance, a hedge fund manager or a mutual fund manager or a pension fund manager can do, right? But when you look at, polls that have been taken in the past of these folks that are market movers that can move the market and their political bias, they typically fall a little bit more on the red side than on the blue side, even if they're in New York City or in like an LA or something, bringing into the conversation what you were saying about geography. And so because of that, they tend to like, when the red president's out there, and they right now, they tend to think that the economy is not as good as it could be. And so that's just interesting because we need to know that, because as individual retail investors, one of our biggest strategies is to jump on the coattails of these market movers, look for signs of what they're doing, try to have an avatar, an understanding of how they're thinking so that we can do similar things at the same timing to take advantage of the moves that they create. So it's something that I wanted to make sure our viewers are kind of factoring in, because I honestly wasn't thinking about it as much, but I'm factoring it into my strategies now.
Yeah, I still find it very hard to believe that in America we only have two parties to choose from
Yeah.
when we have so many options for so many other things, right? Cars, food,
Yeah.
restaurants,
Yeah.
right? Clothes, sports teams, right? But only two parties to choose from.
Yeah,
And
you never know. This ranked choice voting that seems to be getting, it's not the county that I vote in, but one of the counties right here in Washington, D.C. is starting to do that ranked choice voting. And I think same with like states like Maine, I think does this, where when you go to your ballot, you give your first, second, third, fourth, fifth choices. And I think that might lend itself better to America becoming more like one of these parliamentary countries where there could be more than one party. We'll see, but I know that ranked choice voting, it's getting popular, but it's still just a few minorities of the counties out there and states.
I'm pretty sure if we look back at history, there's been a third or fourth party. They just haven't survived to
Yeah, the
2024, right?
Whigs, the Whigs
Yeah,
were a
the way.
big party a couple
Hey,
couple centuries ago.
let's bring them back, right? Let's bring them back.
I don't know
I,
if we
I
want the
kind of
Whigs
like
back.
reinvent themselves. All right. Midway through the show, we're going to dig into a few examples. We're going to get AJ's pick of the week. We're going to get some of our viewer picks in our speed round. But before we do, I want to give everyone a chance to download AJ's free indicator. So as he
Hmm.
does some of his analysis, you'll see a cool little green dot, red dot to indicate buying and selling opportunities. And
Mhm.
so if that's something that you want to incorporate for yourself, head on over to the link in the chat, the link in the scroll bar. You'll get a bunch of other cool freebies, but the indicator is definitely the hot topic of the year, really, to start 2024.
In
So I
fact,
know,
can I say something about that, Sip? You guys
sure.
might notice that on my charts, I've got the newer version. It's not yet there because I have been testing it and I found a couple of bugs, so I sent it back to the tech team. But I wanted you guys to know that it's imminent. Like as soon as these bugs that I found, I'm like the quality control guy, besides the guy who goes to the tech team and is like, "This is what I want." Then they go off and they try to do it what I said I wanted, and then I test it, and I test it really thoroughly. So I found a couple bugs. Don't worry, they're working on those bugs, and as soon as it's passes the AJ Brown test, I'll be putting version 6 out there. So if you go and download the latest indicator, come back periodically. I want you to keep logging into that free access of our web portal and keep checking to see if the new one's out there. It's going to be imminent, right? So the more you check in, I check in daily, like come in and visit our website like daily until we've got this new one up there. And then of course, keep checking in more than that, because some of the other stuff that's in there, it updates on a daily basis. There's a lot more in it than the indicator, but go for the indicator for sure.
And the link to that is in the chat. Head on over there, sign up. Moving on to what AJ likes this week, what AJ is looking at, AJ's pick of the week. This is a name that I don't think we've covered too often. Your pick of the week this week is United Natural Foods, ticker
Mhm.
symbol UNFI.
Mhm.
Boring food
Mhm.
company. That's kind of what you're leaning towards.
Mhm. Yeah. They're barely, they're kind of breaking even, which isn't a bad thing. They're not giving dividends to their clients, but they're in that sideways boring pattern that I actually like. One of the reasons why I'm highlighting this week is the signals that I've been getting for legging into this position have been rock solid, guys. And there hasn't been this, question about, if I miss my signal, will it shoot to where the signal, I can't even act on it anymore. It's been like calm. It's been like you could be a day or two late and still get into the position. And so it's right now at that point in the pattern where I'm not going to take any actions, but I'm asking everybody to take a minute and plan your trade, evaluate your risk, do some back testing to determine what signals you want to use to trigger your moves, right? When we do these premium selling positions, we, look for a signal in order to set up the initial covering position. It looks like the next initial covering position here is going to be either buying some of this stock or buying a substitute option. So what would that signal be for you? I've got a couple of different signals, as you can see here with my different colored arrows here, and I'm comparing, I probably want to act on the blue and the pink one, or the magenta one, versus the red or the green one. As you can see, the blue and the pink one are coming a day early, but I also want to evaluate with my back testing to see, if I trust the pink one, will it give me mistakes? Will it give me what's called false positives? So now is the time to be doing some what I call back testing to determine which actual trade signals we want to act on. Compare a couple of your indicators. And then the other thing is this is a perfect time where it is right now to use, today's or yesterday's end of day prices to determine, the risk that would be in this position, so that you can adequately, number one, size the position so that you don't take on too much risk. But number two, create some price targets so that when you are doing the, different positions, whether it be setting up the initial covering position as a step one, or as a step two, going ahead and selling premium and buying your protective option, or step three, getting out of the premium trade and getting out of the protective option so that you can rinse and repeat, create that income. You want to, know what would be your price targets. What would what would make sure that you're going to make money on this, versus which ones would, be something where you say, okay, I'm not going to make money on this trade. I'm going to wait a couple more days. So trade planning, I can't emphasize it enough. We plan out our trades and then we trade our plans. It's like the philosophy for success of a trader. Now's the time, when things are calm, when we're in the middle of our channel, to do all this preparation so that we can then act without being in like a hurry, without having to like scuttle around and make rash decisions. So that's why I wanted to feature this one today, Sip. I'm in my planning phase on this one, and maybe we'll keep this on our list moving forward, and we'll see, when we actually get the signal.
Yeah, this one looks like a good long-term name to hold
Mhm.
in there. Let it ride some of these fluctuate, because it's not
Make
they're not
that money
they're
every
they're
month.
not even
Yeah.
that wild. So once again, it's
No.
United Foods, or United Natural Foods, ticker symbol UNFI. All right, AJ, before we dig into the speed round, I had a name that I was interested in getting your feedback on, and that's
Sure.
Dell Computers, ticker symbol DELL.
Oh
They
gosh.
had earnings yesterday, and they increased their dividend 20%. I mean, they had a lot of good things to say, and it seems like investors are happy.
Yeah. In fact, there was a run up. As you can see, there was a little bit of a run up on that one. You know, one of those things where we didn't know what was going to happen here. Dell has become one of those companies. A lot of people discount them because they definitely moved from being like cutting edge to being like, I've gone to Costco and I've bought my Dell, right? It's like the majority of people are buying Dells, but look at how much money, how much earnings they're making. Look at how much of a dividend that they're giving. This company is a backbone. It's like a company that's going to be around for a while. And when they do something good, and they've been, selling heavy on the computer side, you know, investors reward them. And so there's a lot of buying into Dell right now. And I wouldn't doubt that Dell, stays in the forefront. Now, can they withstand these higher prices that investors who kind of got excited about their earnings? we might see a little bit of distribution, especially by the people who owned Dell stock for the long term, and now they're seeing a good opportunity to take some nice profits. So I wouldn't doubt that Dell comes back down a little bit, probably resumes this trend a little bit, maybe a step function higher. Would I personally want to do any trading around Dell right now? No, because it's quite speculative what's going to happen next. I like to trade the ones that, I'm not doing a gamble or crapshoot on, that are going on a little bit more predictable price pattern. This was definitely a speculative earnings play. But, it'll be interesting, especially once Dell's price stabilizes a little bit, to see if we could swing trade it. This would be one where I would think about swing trading it.
Yeah, and much of that optimism was from OpenAI. It seems as if they are a good backbone to the AI conversation, although it seems as if they might have jumped in a little late, but they're definitely benefiting from AI and playing a little catch up now, at least
Well,
in terms of
let
the
me
tech
show you
names.
this really quick. So I just pulled up some of my indicators that I use when I'm swing trading, and I've been using this particular combination of indicators to swing trade since, 2002. This is like I call it the reactive template, and so you can see that we've had this trend. I've got this cyan line here showing the 30-day simple moving average. And you can see it wasn't too long ago. It was about 10 days ago that we had this pullback. And you can see my Williams percent R, which is the leading indicator, an overbought, oversold indicator. It went from being above the halfway mark, which is typically, when you see something that's trending up, it means that it's overbought. It's in the people are buying it, right? So it would be spending most of its time above the 50% line because people are buying it. You can see it pulled back, and you can see this kind of intermittent selling. This is the textbook swing trade entry, right? We got this pullback, and it was pullback to, kind of this what we call uh, extremely oversold condition, and it actually created a double bottom here in the Williams percent R. And then we got this confirming bar on February 22nd, followed by a follow-through bar. So if anybody was swing trading it, they probably got in on the 23rd, and you're getting like the bonus of a lifetime. So yeah, I would continue watching Dell for the next swing trading combination of signals, and go from there. Yeah, it's interesting, and I think that as more people hear about things like Chat GPT and hear about all the image generating AIs and all the and more people are dabbling with it, they're going to go and upgrade their home computers, right? They're going to go buy Dell. And so, along with the people who are powering the backbone of AI, like NVIDIA and ARM, you're going to see that it's just going to bring all. I bet you soon we're also going to see things like Cisco, because people are going to need more bandwidth. So they're going to, we're going to have to invest in the infrastructure of the internet. And so we'll see things like Cisco go up. But I think AI is going to bring the whole tech industry up. It's not going to leave anybody behind.
Yeah, good to see Dell making a comeback. I know it's been a while. They've kind of become one of those boring companies, but they're getting back in the mix. Good job, Michael Dell. Keep it up. All right, moving into our speed round. These are a couple names that our viewers from across the country have a little bit of interest in, and they want AJ's take. Now, AJ keeps it real. He either likes it or he doesn't. It's a name that he would put a position on or not, and that's why we kind of bring it up, so that you can have a very honest opinion of things. So let's get started with Peggy from Boulder, Colorado, interested in Eastman Chemical, ticker symbol EMN. First thing that comes to mind is boring.
Yeah, Eastman Chemical, that is the old Kodak.
Oh,
Um, so Kodak forever was synonymous with picture taking, the old picture taking, film, right? Not digital picture taking. And if you think about it, film, the whole thing behind Kodak was the film and the chemical processing. It was a chemistry company. And so all those chemicals, they still are in business. They're just not they've applied it on other horizontals than just picture taking. So they rebranded themselves, gosh, about 20 years ago from being Kodak, the company synonymous with picture taking, to Eastman Chemical, more of a chemical company. And yeah, they've kind of become quite boring. They're no longer a B2C company as much as they are a B2B company. So B2B, business to business, you never really hear about them in the news. But dude, look at their earnings. They make money. Look at their dividends. They give their investors a big chunk every quarter. And let's look at the bigger chart here. So I'm going to go back a year. I'm going to go back 2 years. Yeah, they're boring. They stay around somewhere in the $70 to $90 range, and they've been there literally for a year and a half. So what should we do about this? Let's take a look. This is Peggy. I bet Peggy's wondering if we have found a bottom here. Now, this is where, and I'm not going to do it right here on our show just because I know I've been talking so much and we're like towards the end of our time. So I don't want to spend, but this is one, Peggy, where I would pull up a point and figure chart and I would pull up various different ways. Especially another one I would pull up is a price by volume chart where you could see all the different orders going in at the different prices, because I would like to know how heavy this level of resistance or support is at 82 versus down here at 70. I'd want to see that because I'm trying to determine, is this solid? It looks like it's solid. And my next question would be, did I miss my entry here? Maybe what I should be doing, and maybe what you should be doing, is preparing as we get towards this $90, preparing for the next reversal down. And so that means, number one, I'd be planning out my trade the very similar way that I'm planning out my pick of the week. Now's the time for you to be planning out, doing things like determining what signals you're going to use that'll give you, this is the day I'm going to take action on this, determining position sizing, determining price targets. That's what I would be doing right this minute. And then I would look for a reversal signal, and I would say go download my indicator, probably put something like, in our case, probably just put either a simple MACD crossing or maybe even a moving average crossing, maybe use something like the 3 and 5 day EMAs for your signal. And we'd be getting ready to either short this thing, although it's quite pricey. The other option we could do is we could buy some back month substitute options. So I would go, I guess, out to the September 2024, and I would be buying put options. So to go deep in the money, I would go with the higher strike prices. Probably, and this back month option isn't traded so much. I can tell by the bid-ask spread, but probably something like gosh, maybe use something like this this $105 $105 strike price. I don't know. That's an option. Or you know what else you could do? You could actually plan out and use either a bear put diagonal debit spread or a bear call, not diagonal, bear put vertical debit spread, or a bear call vertical credit spread. I could see doing a credit spread or debit spread to keep your prices on the investment lower. Just remember that if you, um, if you ever use vertical spreads, one of the big things that people do with vertical spreads is they overextend themselves with them. They don't manage the risk properly and they get themselves in a lot of trouble. So just assume that the vertical spread you're going to place, that you could actually have that whole thing blow up in your face. So the amount that you put in should be the amount that you could lose, right? When you're managing your risk on a vertical spread. I've seen so many portfolios blown to hell because of vertical spreads. So just keep that in mind.
And that's what we want to avoid here on the show and in our viewers' trading portfolio. So thank you for that, Peggy. I hope that helped give you a couple ideas on approaches. Let's move on to our next name. This is Arthur in Alberta, Canada, Calgary, Alberta, Canada. Interested in a gas play, U.S. natural gas, ticker symbol UNG.
Yeah, U.S. natural gas. Okay, this is an ETF, and this is an ETF fund, and boy, is it boring because natural gas is boring. The scoop is I bet you're wondering. This is Arthur. I bet you're wondering if we're seeing a bottom here. I've got a signal. Let me zoom in a little bit. I've got a signal that we are seeing a bottom. We're at like all-time lows for natural gas, which is interesting because usually when we come out of the winter season, we see natural gas ticking higher, not lower. But we've also seen that phenomena kind of muted a little bit because a lot of the electricity now being generated in the United States is from natural gas. As the coal plants turn down and as the renewables aren't, taking over the slack fast enough, natural gas turbines have been coming online. So there's a ton of natural gas just going to our power grid. And so the seasonality of natural gas has been muted per se. And also there's been this huge push to get people off natural gas for their personal consumption and go over to like heat pumps. So maybe we're seeing more of the natural gas being flattened out. Okay. With all of that kind of speculation to one side, are we seeing a buying opportunity? Yeah, sure. I would want to see follow through. Did I see follow through on February 28th? I got an end of day signal on February 27th. Did I see a follow through on February 28th? Let's take a quick look. I'm going to come here to an intraday chart. So here's February 28th. Yeah, I did. So then the question is did you miss your opportunity to get into the trade? It doesn't seem that way, right? Because despite getting follow through on the 28th, we're just kind of hovering here. So if you wanted to get into this trade, I don't see why you couldn't do that. I might wait until the beginning of next week. But yeah, the idea is that we get into natural gas either as a buying the stock. I think you could also buy a substitute option if you wanted to incorporate a little bit of leverage, maybe go out to the leap in January 2025, third Friday of January. And then we can totally sell premium on it as it hits its peaks. And so, yeah, I like it. I like what you're thinking.
And some seasonality might have a play here, maybe.
Maybe. I mean, this is one of those boring ones that you could play in the background and not get too hurt on. So, that's what's really nice about this UNG ETF is that, you could create an income stream out of it. It's a great beginner premium selling position.
All right. Thank you for that, Arthur in Canada. Appreciate the love. Moving on to our next name. This is Cal from Wichita, Kansas. Interested in U.S. Global Jets, ticker symbol JETS. Jets.
Yeah. That's cool. Let's go back. I'm too close. I have to back out a little bit and look at this. This is another ETF in the Jets market. Neat. Slow mover. Is this a trending up or is this a premium sell? Or is this some sort of swing trade? I'm not sure. Here's what I would do with Jets. And somebody, one of our followers, threw this into the chat regarding Eastman Chemical. And here's what I might consider doing with Jets, taking the same strategy, which is called a cash secured or naked put, right? And this is a great strategy if you want to add the underlying symbol to your portfolio. And then you could sell covered calls against it later. You can leg into covered calls against it later. So let me just really quickly review what a cash secured or naked put strategy is. So you'd pick a near term, expiring in the next 3 to 5 week option, a put option, and you would actually sell this thing. And usually you find a level of support, like maybe, let's see what the strike prices are on a near-term option. So maybe the 15th of March, and you can see that the strike prices are every dollar. We actually have a couple of them at the 50-cent marks as we get closer to at the money. So, coming down here, maybe the $18 put. Let's check and see what that's going for right now. Not that much. So maybe you go for, well, there's the 19. It's not going for very much either. We're starting to get into something around the $19.50 or $20 mark. Let's see. So what these numbers are, besides strike prices, these are the dollar amounts that you're willing to pay for the underlying symbol. It's kind of like placing a limit buy order at this dollar amount. The difference is, and this is the cool part, is yes, on the third Friday of March, March 15th, if the underlying symbol is below that dollar figure, you're going to be asked to buy. You're going to get exercised and you're going to be asked to buy the symbol at that price you agreed to. But in return, you get this amount, right? So if I decide that I'm willing to pay $20 for this Jets stock, for a share of this stock, I could be getting right this minute 35 cents for every share that I'm willing to buy at $20. Now, on the third Friday of March, if Jets is trading below $20, then somebody's going to say to me, pay $20. I'll get to keep this 35 cents no matter what. And then I may or may not be asked to buy the stock, right? So it's kind of neat. Like if you're willing to buy the stock anyway, no matter what it does in the future for $20, if that's your willing price, instead of putting in a buy, a limit buy order that's good till canceled, do this instead because you get kickback, right? You get a premium. And then, if it doesn't go by March 15th, then you could do the April and then you could do the May. So that might be a strategy I'd use here, although the premiums aren't that high. But if I wanted to add some Jets to my portfolio and I want to do so at a discount, I would pick a strike price I was willing to pay. And it looks like unless you pick 19.50 or 20, it's not going to be worth it. But I would pick one of those strike prices and then I'd get a little bit of kickback. And then if I get the fill, I get the fill. If I don't, I don't. And that's probably the strategy I'd use here. And then once I have the stock or I've collected the premium, but if I wind up with the stock, then I've got some ideas to go forward. I could, perhaps look for an exit at a higher price. I could think about selling premium. But, this pattern is one that, selling naked puts against it, selling cash secured puts against this would be a good strategy. Also looking for a swing trade on this might be a good strategy. I see that, around the turn of the year, there was a nice swing pattern that showed up. So looking for the next swing pattern. But I don't think I'd officially turn this into a premium trade because it doesn't have that range bound pattern that I'd be looking for. So hope that helps.
Thank you for that, Cal. While we were discussing that, I was curious as to what makes up the ETF. Like, what are some of the names, right? So,
What'd you find out?
tracks an index of companies involved in air travel industry, including airline operators, manufacturers, airports, and terminal services. Top holdings include airlines like American, Southwest, United, and Delta. So the airlines and some of the airline related companies.
Makes sense.
Yeah, so sometimes maybe if there's an industry shift, this is a name to keep on the watch list if you don't necessarily want to go in on one of those specific names. So once again, thanks for that, Cal. We'll keep an eye on it. All right, heading into the last few minutes of the show. AJ, today's March 1st, the last month of Q1. Thoughts on how long we can continue to make new highs, because as we're continuing the show, S&P hit 5120. Man, can we end March with even higher highs, do you think?
Let's see here. So I've extrapolated out where we're coming to a pivot here, and I'll be the first one to say the last time I extrapolated out, actually I'm not going to say that I messed it, because I extrapolated out and it pulled back a good, gosh, it pulled back a good $75, the S&P, but that wasn't the big one, and I've readjusted. And I'm thinking the middle of March. I'm thinking when our options expire, there might be something, whether it be a news headline, some sort of tinder is going to get thrown into this pile of gas-soaked rags that is our investor sentiment right now. That's going to cause some sort of breakout, and I'm going to be looking around the mid-March for this, whatever it's going to be, whatever that tinder might be. And then I'm going to definitely ride on the coattails of that. I'm all prepared.
Yeah. And as an options trader, options investor, that kind of gives us the opportunity to take advantage when the market does finally come back down. All right. If you've enjoyed the broadcast, we do invite you to follow along. Hit that like, hit that follow, hit that subscribe button.
Absolutely.
We just crossed 1,000 on YouTube and 1,000 plus, actually. So help us get to the next 1,000. We greatly appreciate it. Also, once again, if you have a chance or you haven't checked out AJ's daily workshop, the link to this is in the chat. Also, the link to the free indicator is in the chat. And as always, if you have any specific questions, comments, concerns, leave it in the DMs, leave it in the comments, and someone will get back to you as soon as they can. AJ, you get to go see Dune 2. It just came out today.
Is that the one that I just saw advertised with what's her name? Zendaya?
Yeah. Have you not seen the first one?
I know.
Oh man, put that one on this weekend.
Okay, Dune. We set up here at our house a cool little room that is a theater. We put a projection TV, and so I'm gonna have to put that one up. I saw, I was a big fan of Dune back in the day, but I haven't seen these new ones, so I better go check it out, huh?
Well, the first one you can watch on Netflix, so go ahead and check out the projector. But the second one just came out in theaters today, and it's been a while since I've wanted to go see a movie in a theater. But the first one was so good, and the way that they ended it, I'm like, oh, I can't wait till the second one comes out.
Is it an IMAX one? Is it one I should go find an IMAX theater screen and go watch?
I mean, make that decision if you like the first one, I would say. But I knowing you and some of the things that we've talked about, it's definitely, it won't waste.
It's up my alley.
Oh, definitely, yeah.
I like sci-fi.
And if anybody watching sees Dune, feel free to let us know what you think.
Yeah, tell us in the comments, dudes and dudettes.
that's going to be my weekend activity.
And everybody else.
All right, AJ, thank you for your time today. Thank you, everybody, for tuning in. We appreciate you. As always, feel free to hit that like, follow us, or subscribe button, and we'll get back to you guys next week. Hope everyone has a good weekend.
Take care, everybody. Thank you.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.